What's up, everybody? Welcome back to Trading Wars. Today I'm going to be talking about time frame alignment. It's a topic requested on Twitter, which is very powerful and definitely an effective trading strategy. It takes a little bit of time to get used to it, but once you are able to read the price action and read the charts, it's quite simple. So if you're ready, let's step into the war zone. All right, so first of all, what is time frame alignment? Time frame alignment is getting the same signal, either long or short, on multiple time frames. So if you're a day trader and you're trading on the 5-minute or 2-minute or 3-minute chart, you're looking at the 15, 30-minute and hourly chart to give you confirmation of the direction you want to go. So if you want to go long, that means you're seeing setups on the 5, 10, 15, and above that are all aligned. So what that could mean is, there's a hammer candle on the hourly chart at a support, and there's a double bottom on a 15-minute chart, for example. So that's alignment for the long direction, all right? And the same thing can be said for the short. In general, you want to bump up 2 time frames above the time frame you're trading on to use for alignment. So if you're a day trader, like I said, on the 5 or 15, you're looking for the hourly 30-minute chart to give you confirmation. Same thing can be said about swing trading. If you're swinging on the hourly or the 4-hour chart, you can bump up to a daily or weekly chart to give you direction. Okay, so why does it work? It works because when multiple time frames are aligned, all traders are aligned, all investors are aligned, because people are trading on various different time frames. But when the signals are aligned across all time frames, it's easier for a trade to work in your direction. Also, there's more money involved on the higher time frames. There's more institutional buying on the higher time frames. If we have a daily chart double bottom versus a 5-minute chart double bottom, they're completely different, because the daily chart double bottom will likely be a lot harder to break and a lot stronger as support, because there's so much accumulation of transactions within that candle. Okay, so I hope that makes sense. So how do we do it? So I wanted to use today's trade as an example of time frame alignment to help you guys understand. So I'm executing my trades on the 5-minute chart. And the first thing that we need to do going into the day is we need to zoom out and go to a chart like this, like the hourly chart. And we need to ask ourselves, okay, where are the major areas of support and resistance before we come into the market, right? So what we have here is, this was the open coming into today. So we could see, if we just scroll back, this is how we looked in the morning coming into the open. So obviously here coming into the open, we had this nice move up and we had an uptrend. So whenever we have an uptrend, I like to have my Fibonacci levels drawn from the swing low to the swing high, like so. And I like to use these Fibonacci's as area of support on a pullback, looking for a continuation on the upside direction. So this area here, 33.93s, was very important to me today, because this was a 618 retracement of the fib. And then when I look on the hourly chart, and then when I looked at the 5-minute chart, and I'm going to use SPY here, it was also the gap fill on SPY. So I had multiple alignments. I knew on the higher time frame that this was a pullback to the 618, and then on the intraday side, on the SPY 5-minute chart, this was also a gap fill play, right? So now let's put that all together and let's look at the 5-minute chart. So again, this was coming into the open here, and this purple line right here is the 618 that I had marked out. So I'll show you that again. We take it from the low here to the high, like so. Right, and as you can see, this purple line is a 618. So I know on the higher time frame, on the hourly, that we're in an uptrend, and this pullback here is a buy the dip opportunity. And coming into the open, we start dipping, but I'm aware of this major level of support, the 618 here, right, with this previous candle here showing support. So as we come down to this candle, we have a nice confirmation here. We have a nice waterfall drop with a nice long wick at the 618, as well as an engulfing candle that fully takes out this bar right on the next candle. So this is what we call time frame alignment. We have the hourly chart showing an uptrend with the area of support, which is a 618 fib, and on the 5-minute chart we have a nice little waterfall downtrend followed by an engulfing candle at the area of support. So in this case, we can say we have time frame alignment. We have the candlestick set up on the 5-minute chart, and we have the support coming from the hourly chart, and we have the regular trading hours gap fill strategy as well. So this is time frame alignment at its finest. What we could have done here is either we could have entered with a stop entry above the high, with a stop below the low, taken some profits here, or we could have just taken the break of this engulfing bar right here, okay? And now let's look at it from the short side. So again, coming into the open, here's the 6 o'clock candle. We have this resistance here at 34.18, right? And this is what I have drawn here. So the higher time frame over here showed me at 6:55 a.m. that there was a resistance where the market turned. And look what happens again. So we have the resistance coming in from the hourly and the higher time frame. And then on the 5-minute chart here, when we come back up here, we have a nice piercing, long, big body red candle right at this level. So again, entry below the low, stop above the high, and this is a beautiful short that you can ride down as well. All right, so that's time frame alignment in a nutshell, starting off with the hourly, drawing the areas of support and resistance, looking at the fibs, looking at the trend, going back to a lower time frame, and then looking for the best opportunities, as well as looking at the RTH and the overnight. So that's time frame alignment at its best. When you have multiple things lined up, the trade has a higher chance of succeeding because there's more eyes on it, there's more money involved, etc. And I'm just going to look at one more example. Let's look at the daily chart for ES, right? And here's another example of time frame alignment. So what we can do is if we go back to September 9th here, before this candle had closed, we see that we had 1, 2, 3, and the 4th day of selling where we were near the bottom of the Bollinger Band. So the higher time frame was saying on September 9th to look for a dip buy opportunity. So now if we go down to the hourly chart and we go back to September 9th, what do we get? So right on September 9th, we get, this is the Sunday open. And in this area here, what we get is a long wick green bar at the bottom of the Bollinger Band hammer candle. So this is another way of time frame alignment. We start off with the daily chart. The daily chart says, hey, we've had a lot of selling. We're at the bottom of the Bollinger Band. We're looking to dip buy. We come into the hourly chart and we get the nice hammer candle set up right there. So that's another example of time frame alignment. Okay, guys. So I hope that really helped. And it's one of those tools that are a little bit more advanced, but definitely as you continue to trade and you continue to learn and study and work with people like me, you're going to get better at it. All right. So hope you guys enjoyed this video. Please comment, like, and subscribe. Please follow me on Twitter.